During the pandemic, first-time buyers have been struggling a lot to get a mortgage. But there are some schemes that have come up by the government and the banks to encourage first-time buyers, so we'll be going over those on today's show. Hello, welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's podcast of Let's Talk Money and Mortgages, we have Itika joining us again today. Itika is a trained accountant and mortgage broker who's been working in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Iti. How are you doing today?
Hi, Gemma. I'm very well, thank you. How are you doing?
Yeah, I'm doing well, thank you. So today's video, we're talking about first-time buyers and mortgages, so let's get into it. The first thing I think we should talk about is this 95% mortgage guarantee scheme, because it's a relatively new thing that's come out. Do you want to give us a brief overview of what it is?
Of course. At the beginning of the pandemic, a lot of banks went into the shell where they sort of stopped giving mortgages for people who had 10% deposits or a 5% deposit. Most banks went into a 15% deposit. But the government gave a sort of a green light with a 95% guarantee mortgage. What that means is the government guarantees 15% of your mortgage and you put in 5% as a deposit, and it is classified as a 5% deposit mortgage. So that scheme has been introduced. It's a brilliant scheme helping people to get into that property ladder, because even before the pandemic, there were only very few lenders who did a 5% deposit mortgage. That's why I said thumbs up, because now there's more options, because a lot of lenders have come to that space. Because in the past, before the pandemic, we only had just a handful of lenders who still offered 5% deposit mortgages. But with this, there's a whole range of lenders like Lloyds Group, the RBS Group, Santander, Barclays. Few lenders, the big names, have been starting to offer these schemes, right? So which is really good for first-time buyers and help the market keep going as well, right? So that's really good news for people who have a 5% deposit.
Yeah. And is there a difference? Because there are 5% mortgages as well now, aren't there? As well as this 95% mortgage guarantee scheme.
Oh, yeah, definitely. I mean, that's an initiative taken by the government. But the good news is, I think, based on the positives, the banks thought, okay, we will start and have our own initiatives as well. So some banks came out and said, okay, we will offer a 5%. They're not part of the scheme, but they said, we will offer a 5% deposit mortgage as well. Now, that's even better news, because from a first-time buyer's point of view, they now have options, right? Because previously it was only the government scheme which was supposed to go live in sort of April time. But now you got lenders saying, come here, I've got 5% deposit mortgage as well. They are not part of the government scheme, but they are offering this as well. So, it's really good news from a first-time buyer's point of view.
Mm-hmm. And a little birdie kind of told me that there's a new scheme that's come out, which is enabling first-time buyers to borrow up to 5.5 times their income. Is that true?
It is true. A leading bank has come up with this scheme, so which is really, really good, because the house prices, if you look at the last 10 years, it's gone up by about 40%, right? But research shows that the income increase for a lot of people in this 10 years has only gone up by 18%, right? So trying to bridge that gap was always difficult. So I think this is with the intention of trying to bridge that gap. This bank has come up with the scheme, which is brilliant. So what the bank is actually now doing is, for people with a certain level of income, they allow you to borrow 5.5 times your income. So usually most banks will give you 4.5 times their income, but subject to your credit score being okay, and your income is verifiable and your expenses are standard and not extraordinary. They give 4.5 times your income. But this bank is willing to go up to 5.5 times your income. Again, is a very welcome move, because if you take an example, somebody earning 50,000, in the past, this particular bank used to give, everything being perfect, they used to give 225,000 as a mortgage, 4.25 times income. But now they've gone up to 5.5 times income. What that means is this same person or couple can borrow 275,000, which is like a 50,000 increase. That kind of helps you bridge that gap, right? So it's a brilliant initiative. So it's great to see a lot of initiatives out there to help the first-time buyers.
Thanks, Ifti. And just to let everybody know, obviously today we're going through different points and summarising, but if you do need more information, please do reach out to us because, it's a very individual thing and, we can be a lot more specific with you guys if you reach out to us. But the next thing we wanted to talk about is this Help to Buy scheme. For anyone that doesn't know, what is the Help to Buy scheme, Ifti?
Okay, Help to Buy scheme is mainly for new builds and now it's for first-time buyers as well, right? So with the Help to Buy scheme, what happens is you only need to put a 5% deposit. So it's similar to the first few schemes which you spoke about. But the government gives 20% deposit as well, right, as an equity loan. So together, it makes it a 25% deposit. And you can buy a property using that deposit. And effectively, the bank needs to only give you 75% deposit mortgage. That, helps people because the interest rate drops because you have a bigger deposit, so bank sees you as a less risk, so the interest rate drops. But at the same time, it gives you that extra space to buy the house. So if a house was, say, 400,000, for argument's sake, you now only need a mortgage for 300,000. So, the amount that you need as a loan drops, right? So with Help to Buy, it's definitely helpful. But there are some restrictions on Help to Buy because Help to Buy is restricted to maximum of 600,000. And that too in London. Yeah. So if you go out of London, the houses allowed under the Help to Buy scheme is going to be much lower, right? But sometimes it doesn't matter because London, as you know, is probably the most expensive place in the UK, right? So, but still that scheme is out there. It's a great initiative for people who want to make use of it. So Help to Buy is a good scheme.
Yeah, thanks, Ifti. And, we obviously love to help give people as many options as possible. So there's this thing, the joint owner, single proprietor mortgage. Now, can you explain to everybody what this is and why that might be applicable for first-time buyers?
Yeah, this has been around for a long time, but it's fairly underused. It's very helpful where parents probably want to help out children, which means when you apply for the mortgage, you apply as a joint applicant. So for example, mother and daughter or father and son, they kind of apply for the mortgage together. So the assessments are done based on sort of joint income. But when it comes to the deed, the deed will only be on the child's name, right, in this example. So it's a fairly underused mortgage product. Not all banks offer it as well, but there are quite a few banks who offer that. But it definitely helps you, right? Because, most of the time, people who go for first-time buyers, they are probably early in their careers. Not everybody, but most of them are, right? So for them, it's always helpful because, they struggle with trying to make those income multiples work. But obviously, parents can pitch in. They can be part of the mortgage, which boosts them with the amount they can borrow. And that's helpful. And obviously from a parent's point of view as well and from the child's point of view, because it's single proprietor, your stamp duty won't be considered as probably a second property, right? I'm not a solicitor, but you probably want to get some legal advice on this. But as far as I know, you don't have to pay that additional stamp duty. So that's a real thumbs up as well, because just because the parent owns another property that, you have to pay that additional stamp duty, which is always helpful. So it helps you get up the property ladder. So that scheme's out there as well. Like I said, it's fairly underused, but do speak to, if you're getting advice, do speak to your advisors about this.
Yeah, no, that's a really good one, actually. I don't hear many people talking about that. So, yeah, we just want to let everyone know it is an option. And then the other one we want to talk about are mortgages with guarantors, because that's another thing as well. I don't think people kind of talk about it as much as they could do.
Yeah, it's very similar to the previous one. But whereas here, let's say son and father does it. So the son and father buys the house. But here, the father is only a guarantor, right? So he's not part of the mortgage application, but he's a guarantor, which helps you boost that income multiple because the father's income can be taken into account. The downside for the father is if the son doesn't pay that, he's got to pocket out the money, right? So that's the downside. But obviously, with families, they kind of trust each other to a good extent. So, hopefully there's no issues like that. So it's very similar to the sole proprietor joint applicant scheme, but here there's no joint applicant. It's only a guarantor. So that works very well as well. Again, fairly underused concept because it's been out for a long time. A lot of people don't know. But if you are struggling to meet those income multiples and get up the property ladder, it's something you want to explore for sure, right?
Yeah, definitely. That's another one, a good one. Thanks, Ifti. So shared ownership now. I think we have to talk about this.
Yeah, that's right. Yeah. Again, it's a concept that's been around for a while. Helps first-time buyers for sure, but fairly underused as well, right? So it's usually a housing association who's involved with shared ownership. So where, say for example, I'm a first-time buyer, I go and I approach the association. Together we buy this house. So I take a mortgage on, say, 50% of the property value. The association can fund the rest, sort of thing, right? So together we get it. So then I don't have to aim for that 90% or 80% mortgage, because I can put a smaller deposit and the rest, the association gets involved, and then you buy the property together. But obviously, my share, I can even get a mortgage on my share, right? So that always helps. But what really happens is I pay off my mortgage, as well as for occupying a share of ownership of the association, I need to pay them a small rent as well, right? So that's how it works.
Yeah.
But it's definitely a stepping stone for people who want to buy a property and who is struggling to make those income multiples work, or people who are struggling to save that deposit. This scheme is out there as well. I mean, it's not widely available all over the place because there's only selected associations around, but the concept is there, right? If there's sort of new builds or anything like that, you probably want to explore that. And also there are some certain second-hand properties as well, which has to be a part of the scheme anyway. So when the previous owner leaves, sort of thing, you get into the scheme. So that is a fairly underused concept. A good one for first-time buyers for sure.
Yeah, and I think the idea is that even though you pay rent on the part that housing association own, it's still, even with your mortgage, supposed to be cheaper than if you were just renting, isn't it?
Definitely, yeah. And also, you're still paying part of the capital, right? So without sort of really feeling it, you're starting to own property. Suddenly you're building equity, which can potentially be used to pay off the association at some point, right? So it's it's a good scheme. It has a lot of merits for sure.
Yeah, it's a good stepping stone, I'd say.
Yeah, definitely.
Okay, so next one. Are top tips for first-time buyers?
Yeah, of course. With all these schemes, say for example, if you're going for a 5% deposit schemes, what we feel is banks may have up the credit score levels that's required, right? Because you have to pass this credit score before you can get a mortgage, right? So I think they're a little strict on that side. So you need to work on your credit file for sure, because that's the main thing that you have to look at, right? So with the credit file, just make sure you're on a voters register. Make sure as much as possible you're on direct debits, so that you don't have any late payments or anything like that, because if it's on direct debit, the bank will look after itself, right? Or between the bank and the supplier, they'll sort it out, right? So you don't have to worry. Don't go and borrow unnecessarily, because it could affect your credit scores, because the more debt you have, your credit score can go down, right? So don't do that. Credit cards, use it sensibly, right? It's not a bad idea to have a credit card, because banks like to see that you have financial commitments, and they like to see that you're settling it, right? So therefore, it's not a bad idea to have a credit card, but don't go and get 5 credit cards, which is not something banks like to see. Just restrict it to 1 or 2, and make sure there's headroom, right? So this is a key thing a lot of people don't understand. If your credit limit is, say, £2,000, don't use it up to 1,800, 1,900 every month, because your headroom is very small, because then the banks think you're not managing your finances well, right? So just make sure there's always headroom. If your limit is 2,000, stop at 1,000. Don't go beyond that, because they like to see that you're managing your finances well, right? So I think the banks have got a little strict after all this COVID stuff. And obviously, I can understand from a bank's point of view, you're only putting a 5% deposit, right? Because just in case house prices go down, it's negative equity and they are at a problem, right? So they will be a little bit more stricter. But it's fine. It's achievable. So that's quite important. Just make sure you don't have any CCJs or bankruptcies. If you can keep those clean, that's great. And also work on your deposit, right? There are schemes out there to help first-time buyers. The most popular one, people call it LISA or LISA, right? It's a lifetime ISA, where you put in money and the government tops up by 25%, right? It's a bonus, right? How often does government give you a bonus, right? Make use of those schemes out there. There are people who are on the old Help to Buy ISA as well. They still can make use of it. Make use of it, right? Because you need to make maximum use of your savings. Look for savings accounts which sort of pay high interest rates and things like that, so that it'll help you save, right? That's the whole idea. Because, your house buying can be a process. So it might take time for you to build up. Any bit helps. Like with money just lying in your current account, it's not going to help you, right? So you need to find a way to get some kind of return for that money. So those are the tips, right? So work on your deposit, make sure your credit history is clean, right? And look at things like your bank statements, because banks go through in detail nowadays your bank statements. Get rid of all the...
curb the spending.
Curb the spending and get rid of all the unwanted bad habits, right? I think it's, for a lot of people, it's helped, right? Because during lockdown, there's less entertainment. But, banks do look at your bank statement in detail, right? So please do make sure it's all clean. So those are my kind of tips, right, which will help your mortgage here.
Great, thanks, Ifti. So the last thing that we wanted to kind of mention, because I don't feel like we talk about this enough, but how can a mortgage advisor help a first-time buyer get a mortgage?
A good question. For me, a mortgage advisor is a mentor, right? Especially with a first-time buyer, because I mean, some people do know, even though they're first-time buyers, they've done a lot of research, but most people don't have time to do the research. So they come to advisors to mentor, right? They want somebody to handhold through the process. So that's exactly what you need to get out of your advisor, right? Because I have worked with some clients, we handheld them during their first transaction, and they've now become like clients for life sort of thing, right? So it's always really helpful. Speak to an advisor. I think probably a starting point will be going through things like your credit files, ask them whether there's anything else you can do to improve your credit scores, because sometimes the credit scores might be sort of low, but there might be a few things you can do which will increase your credit score, right? So if your advisors can help you with things like that, it's really great, right? So I think that's where you need the advisors. First, to guide you whether you're in the right place, and of course the advisors will help you select the right mortgage. Because if you go to X bank, they will only offer what's there, right? They might not offer, like you said, joint applicant and single proprietor sort of mortgage, right? They might not offer you that, right? Or they might not offer you a 5% deposit mortgage, or they might not deal with the government 5% deposit scheme. So that's the risk. But advisors generally know which ones offer that, right? And who will offer, at least if it's a 5% deposit, who offers the best rate. So because they kind of know that, so they will be able to help you with identifying the right product for you, right? So that is always helpful. Then a lot of advisors will sort of go through your bank statements even at early stages and tell you, okay, right, these are the things that you have to be mindful about. So try to get maximum use of advisors. That's why I say advisors are like a mentor, like that will guide you through this process, right? Then, of course, with advisors, they will help you with things like most do, finding solicitors, finding surveyors, which is kind of taking away some of the stress from you, right? It's not their job, but they do it, right? And also, if you have the transaction itself, the advisors, usually they follow up with solicitors, they follow up with surveyors, just to help you, because you are new to this process, right? So those are the things that they can help you with, right? Because otherwise you'll have to go and see a survey in the area who's good, right? And how easy is it for you to do that, right? So because you're not done that before, so they will help you. But also the advisors can help you speed up the transaction, because I see that there's still stamp duty holiday around. So what you can do is speed up the process, right? Because when it comes closer to the deadline, it's always difficult. So you need an advisor who will do this electronically, because if you have planned to bring papers to an advisor and all that, it kind of delays the process. Nowadays there's open banking which you can make use of. Your IDs can be automatically verified. So there are a lot of technologically advanced brokers who are out there who can help you. Now that will help you speed up the process and keep it very slick, right? And avoid a lot of admin work. So I think with those things, the brokers can definitely help you out, right? And as I said, use your broker as a mentor, right? Because you need somebody to hold your hands. And I think the broker is probably one of the few people who can do that, right? So that way the brokers can help you.
Yeah. All right. Well, thank you again, Ifti, for some more great advice. I just want to put a reminder out there that these points may or may not be applicable to everybody. So if you're unsure whether they're suitable for you, please contact a broker. If you don't have a broker, I will leave our contact details below, as we're always happy to help here at WIS. I just wanted to remind you that as a mortgage is secured against a home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.